And DD India's Shyama Mishra joins us from Mumbai on this. Well, Shyama, markets have opened with one of the strongest single-day gains in recent times. How much of this rally is purely driven by the India-US trade deal, and do analysts believe this momentum is sustainable beyond today?
For starters, we understand that the markets were really waiting for a good news, and after the budget days, we did see that this particular rally, which was going downwards, has now changed its direction and it's going upwards. There have been so many sectors which have gained from it, which will be gaining from this India-US trade deal, and that is why we are seeing so many gains, such a huge gain in these sectors. Apart from that, we are also seeing Sensex and Nifty, both of them trading in green zone, and we can say it's a sustained one because since this is a huge news and we were waiting for this particular news for months and months, and now that the governments of both the countries have been able to crack this deal, it is going to be a sustained one because this is going to largely benefit the people of India. Because there was so much uncertainty, and we were talking about this particular uncertainty, tariff tension, tariff geopolitical uncertainties in so many events, including the Reserve Bank of India policy, even including the budget one. So, it is important that we have such kind of deals. And now that it is confirmed from both the sides, it's confirmed from both the ends, it is going to be beneficial for a large amount, for a large population, for a large chunks of people who are dependent who are completely dependent on on the exports, imports, and they were wanting their products to be sent to US. They were dealing in that particular area since a very long time. So this has come at a very opportune time, and we also heard during the economic survey in the budget that India is a bright spot, and India is a place where a lot of international investments are getting attracted. With this deal, we are expecting that the confidence would be renewed, and not just the domestic, but the FIIs also would be putting in money in the stock markets, and Indian story of growth and Atmanirbhar.
All right. Also, Shyama, global risk sentiment has clearly improved after the trade deal. Are foreign institutional investors already showing signs of renewed interest in Indian equities? And could this mark a turning point for capital inflows as well?
We have seen this pattern so far, of late, that the FIIs were pulling out, and that is why the markets were not performing good. Now, this particular deal has come in. We have also seen several other deals, bilateral deals of India with other countries, including the UK-India, the EU-India FTA. Apart from that, we had earlier also seen the Australia one. There have been so many deals that are coming in the kitty of India, and the Indian government is actually negotiating it well on the larger part of the population, keeping in mind that the important elements such as the agriculture or dairy is untouched, unaffected by these deals, and it remains strong. So overall, these deals are largely beneficial for India, as well as, we are also talking about Make in India. We are also talking about Atmanirbhar. We are talking about Viksit Bharat by 2047. So all these deals will be helpful. And as we are talking about the growth story of India, it is getting stronger. Definitely, a lot of people, a lot of FIIs would be coming in India. And this was, it was a short while back when the FIIs were putting in heavy money in the Indian markets. And if you see the Indian markets return, they have been phenomenal. But due to, as we say, that markets run on the elements of emotions,
right,
and they don't like surprises, they like continuity. With this particular deal, markets are expecting that there will be continuity, and the markets would be largely benefiting from the confidence of investors and the confidence of Indian growth story.
All right. So growth story of India definitely growing out there. Thank you so much, Shyama, for all that.